THORChain is a decentralized exchange that enables you to swap Bitcoin with thousands of other cryptocurrencies. All layer 1 native tokens, no bridges or wrapped tokens are involved. And it's all within your self-custodial wallet. There's no KYC on THORChain. KYC means kill your customer. It is permissionless. THORChain's token is called RUNE, and that's spelled RUNE. You do not need to buy or hold RUNE to place a swap on THORChain. And the fees that are deducted from your swap are used to buy RUNE, and this RUNE is the yield that goes to the liquidity pools and nodes. There are no block rewards on THORChain. 100% of this yield is real. And THORChain is deflationary. 5% of all rewards are swapped to RUNE and are burned. THORChain has another token called TCY, Tango Charlie Yankee. This token is kind of like a preferred stock. 10% of the protocol's revenue goes to these token holders. If you deposit crypto into savers or took out a loan on THORChain, make sure to claim your TCY tokens. And if you're interested, anyone can buy this token as well. To swap on THORChain, go to thorchain.org and click the swap button. It'll redirect you direct to our site. New features and functionality are being wrapped out as we speak. If you notice any bugs whatsoever, please use the email on top of the page. But so far, so good. I haven't heard too many people have any complaints lately, so that's awesome. But yeah, keep an eye out for new features. Rujira is building decentralized Binance on THORChain smart contract layer. It's being rolled out as we speak. Speaking of Binance, you guys have been doing really good. If you got RUNE on a centralized exchange, get it off, withdraw it, put it into self-custody. These tokens are being used to short sell and mess up the price for us. Let's get it off there. Just like TCY, we don't want any sex exposure. And then once in self-custody, you should look into bonding your RUNE to a node to earn some yield. How this is done, you can go to runebond.com. Really easy, guys. All you do is pick a node, request a whitelist, and then bond your RUNE. If you are someone in the community with some technical skill and you are wanting to run your own node, we are training node operators. There's a whole community infrastructure built. So if you know somebody or if you want to become a node operator, let's push this about a little bit. I want to make sure we get people who have the resources to become node operators if they choose. There's a THORChain community Discord and Telegram that you can learn all about THORChain. To find the links, go to @Thor, THOR, community, all one word, account on Twitter. Guys, please repost the space. If you're listening to the recording, repost. Let's see here. Let me get back here. Let's take a look. Again, daylight savings time, you guys. We might want to delay an hour because I think Cow's not going to come in for an hour, but let's see here. Checking in. Or I'm going to roll with it until we make a decision, okay? If anyone wants to come up and ask any questions or anything like that, that's fine. But it's hard to know from my perspective whether or not I'm wrong or they're wrong. Because when I look at all my devices, it says now's the time. So it's really weird. So, I mean, it would be nice if we never, I got to tell you guys, living in Arizona, I love it. I love the time always being consistent throughout the year. I've lived in different states where the time changes. And it sucks. It really, really sucks. I don't like it. I don't like losing sleep. I don't have to think about it. It's all abstracted away. So let's get we got a little laundry here we got to take care of. So shout out to Yangu. He got shouted out by the THORChain account for being an awesome community member. So shout out to that guy. Very cool. And there's so many wonderful people. And just in case anyone's in here, if you have not been shouted out by the THORChain account yet, and you've been very active and wonderful, don't fret. There's a big group of people that we have. And it's kind of random. It goes like in a big pool, and then there's a thing that I might pick. So if you haven't been chosen yet, don't feel bad. There's so many wonderful people in this community, and a lot of them are in here. So, okay, let me see here. Let me get on our messages here. Yeah, okay. Calling Cow. Let's see if we can get Cow in here. Friggin' daylight savings times. But no worries, guys. Today is a beautiful, beautiful day. I mean, memless. We got the limit swaps are live. This is so freaking cool. I'm so excited. Very big. So we're gonna see how it's going. As you guys know, with the limit swaps, they went live. We had some issues. We had to do a hot patch, which was 3.12.1. That is now live. And so far, so good. But everyone stay vigilant, right? If you see any problems whatsoever, please call it out. Okay. Because who knows? Oh, I see Familiar Cow just popped in. Sweet. Hopefully, hey, Familiar Cow, we not sure daylight savings time. What's going on? Okay, let's get him up here. If I'm wrong or Kenton's wrong, oh, friggin' internet, I swear. Okay, so he's requested. I'm gonna get him up here. Cow?
Yo, what's up?
What's going on, man? Hey, what's the time say for you? Was this incorrect time? I don't know what's going on.
I got an invite for two, but you know what? It's all good. I was doing something else, and I just happened to check my. I went to the room, check my phone. I was like, oh, shit. Sorry about that.
No, dude, I'm sorry about that. Well, here's the thing: I was in the Telegram group, and I was all my tipple. I get pumped up. I'm all yelling in all caps, like, "Are you guys ready to do this?" And Kendon's like, "It starts in an hour," and then the thing started, and it's just been a cluster F.
All good, all good.
Oh, funny. Dude, okay, so I got the audience warmed up, man. We got limit swaps live, and now Memless went live. Maybe you want to give us an update on the latest information?
Yeah, sure. So, I mean, there's been a lot of things that have been going on. So, let's see, we released 3.12 earlier this week, and that has memoless in it and then some fixes for limit orders. So, we previously had limit orders in 3.11. It's part of this like advanced swap queue thing, and the advanced swap queue just includes like bunch of improvements to the regular swap manager, but also has limit orders and like other cool stuff that's inside of it. But there was issues with it, and the biggest issue was that it affected the quote times. So like when you're requesting a quote, it would take way too long because because like the logic is duplicated from like when you're actually doing a swap. So it checks all these limit orders and stuff. So it was causing like real lag on the quotes. So that's obviously really bad because you need like really good latency for when if someone's requesting a quote, like they need to know what the price is, right? So like let's say it would take like 200 milliseconds before, then it would take a couple seconds, 5 seconds to get a quote. Way too long. It's like it's not where we want to be. So we had some fixes to get out with that. So we finally re-enabled that earlier today. So we verified that all the issues with like the quote latency was fine, and so like that's looking great. And then I guess next is memoless, which we finally turned on today. So we can dive into both of those, but yeah, we finally got like 3.12 up, stable, and then yeah, we're just chugging along like normal, going on to the next thing. But yeah, that's like the biggest update. So like we can dive more granularly into what like limit orders and memoless will do, but like I'm just so glad that we finally got them up on mainnet. Mainnet is stable. We're looking good. There's been like just it's kind of bumpy with some issues and stuff, so I'm just glad that things are looking great today, and we're finally able to turn on like our two most long awaited features that we've really been trying to ship.
Absolutely, and thank you, dude. You've just been so great, and keeping the community up to date. And dude, you're a legend. I would be remiss, guys. I want to go to my brother Kenton, and dude, Kenton, thank you for adapting and overcoming. So sorry about this time confusion. It confused me. I think I'm the one that's wrong, honestly. So thanks for hopping in. And Cal was the same thing, Kenton. So I think it's on my end. But anyway, I'll kick it to you, brother. Thank you. We'll get this cleaned up next week.
No, it's good. It's daylight savings. Like I hate it so much. I wish the world would end it. I know. Yeah, my calendar says in an hour from now, and but it could be. I'm in Cayman. Cayman doesn't observe daylight savings, but I'm pretty sure. So I think we're on EDT time. I'm pretty sure I made the calendar right for EST. So I don't know if there's a mix up or what. Anyway, well, yeah. Sorry, guys. But yeah. So trying to figure out for next week. So 2 p.m. Eastern Standard Time is when we'll do these. Going forward.
Looks like we get the show starts 1 hour earlier, I guess. So what the heck ever, man. Yeah. Maybe this is fake because we have a lot of cool things going on. So Okay, Cal. So you gave us a rundown on, memless, the limit swaps. I kind of just want to give you the floor, man. You just, if you want to just break it down, however you want to explain it, like what this means for THORChain. You're really excited about it. It was just maybe we'll get to the nitty gritty, and maybe explain. If people listen to the recording, they don't really understand what kind of level this up. Maybe we can break it down simple and go from there.
Yeah, of course. All right, so let's start with limit orders. So like limit orders is a feature, like, you're probably familiar with, like, any like brokerage or whatever. You can say, I want to buy like this asset at this price. So we have a very interesting like limit order system that's built on top of the regular swap functionality of the network. So you might be familiar with an order book, which is what like centralized exchanges use. And it's very popular because it's very capital efficient, because you have, people who go and place orders and they say, I want to buy at this price and I want to sell at this price for like any asset. THORChain doesn't really do that. We have like a kind of different order book where at the end of the day, it gives you the same result, where it's, you say, I want this asset at this price. Like I want to to buy Doge and sell Bitcoin. I'm selling Bitcoin for Doge and I want to get it at least at this price, or I want at least this much Bitcoin out on the other end. So the way that we actually accomplish this is different than just like an order book where you're matching directly with someone who has an order on the other side. So everything on the order book goes through the pool itself. So your counterparty is always the network. Like you're never trading peer-to-peer with another individual, which is like mostly how an order book works. And usually you're trading with a market maker on the other end. The market maker is always the protocol, just like, like any other, V2 style AMM. So basically you put in your Bitcoin and it sits outside of the pool. So, THORChain has custody of your Bitcoin. It holds it as a secured asset, I believe. Maybe it's a trade asset. I don't even know. It holds it outside of the pools, and it says like, all right, well, every single block, like, can I make this trade for the price that they said they wanted it for? So if you put in $1 million worth of Bitcoin and you want, some greater amount of Doge, the price has to shift, obviously. Otherwise, it'll just get executed. So it checks like, all right, can we swap this much Bitcoin for this much Doge? And it just does that once it sees that you hit the price limit, basically. So it's kind of a hybrid between a traditional order book where you're matching kind of peer-to-peer against other orders. You're always matching against the pool. So it's that's kind of how the hybrid system works. So you're always using the pool, which means like you're using the regular like slip settings that we use for THORChain. So like the default fees and stuff still applies. But I think this does a couple of things. First off, it enables limit orders, which is just like a useful trading feature that people can use. You can set like literally you could just say you have USDT on Ethereum and you want to like set an ARB order, right? Like you can set a limit order for USDT on Binance Smart Chain, like any two assets that are on the network, and it'll just automatically XT when it hits your price. So you put in, $10,000 worth of USDT on Ethereum, and then let's say the USDT price like goes out of line, because it's all based on like THORChain's internal prices. So like if the prices aren't in line and you're like, all right, this is USDT on two different chains, you could just place an order and then like, let's say like for a 5% difference. And then if that price ever hits, just because like USDT's price drops on the network or on like Ethereum or on Binance Smart Chain, you can like ARB basically. So I think it'll be very useful mostly as an ARB tool. And not for like that example exactly, but I think like the pro ARBs on the network, they'll be able to place limit orders rather than just do market orders. So I think that just enables a lot more efficiency when it comes to ARBing, because the ARBs can place their orders based on where they can ARB on other exchanges. So then you could go to Binance or Kraken or Coinbase and say like, all right, well, here's their order book. This is now I'm going to place my orders on THORChain based on their order book, so you can kind of like mirror the order book from other places like Hyperliquid or like literally wherever, and you can just arb for a profit. So you can just so basically what bringing order books in this way will make arb easier and more effective. And then okay, so that's like the basics of limit orders. So I hope that made sense. I think it like as a trading feature, I think it's pretty useful. I think market orders are like fine as it is, but it's just like another trading feature. But it's really just a big unlock for ARBs. Did I miss anything on just like the basics of the limit orders before I move on to like the next stuff, the rabbit swaps and stuff?
I don't think you did. Kenton, you got anything?
Well, yeah, I have a few questions before we move on. Thanks, Kyle. That was great. So I'm curious, if I place a limit order, and it's getting like it'll just slowly get partially filled. Like, what if I have like I want to buy $1 million of Bitcoin at one price, but the price keeps fluctuating. Will I get filled like $100 here, $1,000 there, $100,000 here, and just eventually it'll just keep filling until it fills the whole thing and then completes the order?
Good question. I'm actually not sure if it does partial fills or not. I'm not sure. I feel like you might only be able to place one order per pair. Like you'll have like one order for your Bitcoin to USDT pair or something like that. So I'm not actually sure if it does partial fills or not. I guess we'll have to see whether that's a thing.
I know I asked Chad in a previous space and I totally forget. So then, okay, well, actually, you brought up another question I have then. So what if I wanted to stagger my orders? So I wanted to put in an order for Bitcoin at $100,000, an order at 95,000, order at 92,000. I can have multiple different limit orders on the same token, or
I'm
no?
pretty sure you can. I'm actually not 100% sure. Like I've just tested the basic functionality of it. Chad wrote the feature, so he's like way more familiar with like exactly how it works. But I know it's pretty robust. So there might be partial fills, and I believe you can probably place multiple limit orders. So I haven't tested that myself, but
I would think so. And I'm pretty sure he said, yeah, it's partial fills. And if anyone's curious about the front end, so I've been working with the devs on that and the UI for limit orders and memoless. So I just messaged the guys after I heard Cal say that limit orders are live. So I just messaged the devs to push forward the update on the website. So hopefully that'll go out later today or tomorrow type thing, and you'll be able to enter limit orders, and you should be able to see your orders as well. So when you connect your wallet, should be able to pull your orders, and you'll be able to see your list there.
Yep.
And play with it. Please play with it, you guys. It's just like $10 here and there. Try some things. And tell us if it's working or not. I've gone back and forth with the UI with the devs, kind of how I think it should look, and they tell me how they think it should look. But this is for everybody, right? So, we all use things differently. So, hopefully we can kind of find like a good middle ground that makes sense to use this. So don't view the site's UI as like this is set in stone. It's the only way it's going to look. Like we got to come up with something and just start playing with it, and then see what makes sense, how to rearrange things. So appreciate your guys' feedback when you start playing with the feature.
Yeah, I'm glad the new site's been getting some adoption. I've been seeing it on top of the leaderboards. We just got to get the word out there a little bit more about the swap site, which will improve over time. So it's like, I'm sure we'll just continue to ramp that up and just try and grow it as time goes on.
Yeah, it's been frustrating because we've had issues like connecting it with certain wallets and stuff, but until the devs don't want to push out too many updates until the back end for DEX segregation is done, because it's going to duplicate a lot of work and make it harder. So that should be done any day now, and then they can start adding the more features and the wallet stuff, like all the wallet updates, like adding key store and stuff like that, will come out at the same time as the DEX segregation. So that should be any day now. And then adding these features, the UI for them, and tweaking that should happen more quickly. So yeah, so thanks for your patience, guys. Thanks for using it. You know, it's only should be up only, right, from here as the site gets better. So
Nice.
yeah.
Cool.
But okay, yeah, go ahead.
Oh
Sorry,
yeah,
Cal.
I got two things about memless I was just thinking of, which might be interesting. So first is that so because it's not a traditional order book, you can place orders on any arbitrary pair, and it doesn't matter if there's liquidity for that specific pair or not because we're using the pools, right? So like okay, so imagine this as an example. Like you go on Binance and you want to trade. I mean, let's just use Rune as an example, but it's like there's like two markets for Rune. There's USDC and USDT. And only things you can put a limit order for are your Rune USDC or your Rune USDT limit orders, right? With the because this is like a hybrid order book where it's not a true order book. It's just limit orders on top of the AMM. You can place limits orders for any pair that exists on the network. So you could place it like well on Binance you would only be able to do like those pairs that are explicitly supported. Like you can put any arbitrary pairs that THORChain has as limit orders. So you can say like, I mean, like I said with Bitcoin and Doge, like there's no actually there probably is a BTC Doge order book on Binance, but let's just say like an AVAX Bitcoin Cash limit order, right? Like that order book probably does not exist on any exchange anywhere, but you can still place a limit order for that and you'll get filled if the prices are in the right spot to fill your limit order. So even though there's no liquidity for that pair itself, because it's just using the regular pools, there's still liquidity because it's just executing like you're not just trading like obviously it's going through like the double swap steps where you're going from like AVAX to Rune to Bitcoin Cash or whatever, so you don't actually need liquidity on that explicit pair in order to get filled, which is cool.
That's very cool. That sounds like a good post. I'm looking forward to volume exploding on the AVAX Bitcoin Cash pair now.
I mean, there is one. I mean, there's that one guy that keeps swapping AVAX to Bitcoin Cash. I'm sure you've seen that. Like, there's
I
like
haven't.
I don't even know. It's an exchange. This has been happening for years. I think it's like I'm pretty sure it's got to be an exchange, right? Because it's like one person that's been swapping AVAX to Bitcoin Cash, and not just like a little bit of it, like millions of dollars worth like every week. And, like these are streaming swaps that are just like pretty constantly going. Maybe they haven't been happening recently, but I know for a while they were going on. So I think it's just an exchange, like rebalancing. Because, like I said, where are you going to get AVAX Bitcoin Cash liquidity? Like that specific pair doesn't exist anywhere except like on this network.
I know exactly what you're talking about, 100%.
Yeah.
It's been going on for such a long time. I always thought it was so weird. I'll kick it back to you, Kenton. Did you have something else?
No, I was just gonna ask, do you know, Cal, if like THORChain.net is gonna do any kind of like explore or something to view like all the limit orders on THORChain, so we can have like kind of like a aggregated order book somewhere?
Yeah, I'm sure they will. I was already kind of building out one myself for Rune Tools, which it exists already, and I think that it's looking at StageNet right now. But now that we're live on mainnet, I'll switch it over so that way we can look at mainnet orders. I'm not 100% sure because it's been like a couple weeks since I looked at it, but yeah, like there's an endpoint that just tells you like, all right, for Bitcoin Cash to AVAX, this is the orders that are available. So you can kind of make a pseudo order book using that, and you can just see where all the limit orders are. So we can ask for that to be on THORChain.net. That'll be pretty easy to do, just like whatever the UI looks like. So yeah, that's pretty simple because that data is like very readily available. And then I guess the other thing that I wanted to mention about limit orders is actually a bug, which I think is a feature that Chad mentioned this to me, and I was like, this is actually really cool. So let's say you have like $1,000 worth of USDT, like I mentioned before, and you want to just put in a YOLO ARB in there. Like you say like, all right, if any of the other stablecoin pairs rise to $1.05 or whatever, I want to buy that stablecoin pair. You can use that same $1,000 to place a limit order for every pool. So like if you only have that amount and you want to ARB, you don't just need to just put it into the one order book and just hope your bid hits. Like you can put that same $1,000 into the order book of every single pair, and then if your stink bid hits, then it just fills there and cancels all your other orders. So you can I don't really know if that's capital efficiency or not. Like, I don't really know if there's a good term to describe what that is, but it's like you don't need to just have a ton of money sitting around to ARB. Like, it means that you can use, I guess it is capital efficiency, because you can use like the same amount of ARB money to put in a lot of orders, and they just kind of get filled wherever is needed. So I think it'll make ARB a lot more efficient in that way, because you can kind of just place a bunch of orders all at once, looking at other order books, and just liquidity just moves around for you.
I think that's super cool, but I'm trying to walk this through in my head. Like, is there a risk of a double spend? Like, what if you have like 10 different orders going, and then within the same block, 2 of those orders hit, like those prices hit, and then wouldn't the system try to fill both those orders at the exact same time? And
it would just be whichever one gets filled first. I'm sure there's some kind of way to determine how it would be ordered. I'm not sure exactly how that would be, but there's no risk of the double spend there, according to chat at least. So there shouldn't be any double spend risk, but you can still. So I don't know exactly how it would be determined which one gets filled first, but we're not gonna like double spend or anything like that based on the feedback that we've gotten there.
I'm gonna ask Chad next week. I'll write that question down.
Yeah, but I think it's a. So I guess it's actually a bug, but to me it's definitely a feature, because that is like that's awesome. Where you can just the stink bid thing is like the perfect like product, right? Because like sometimes you see just like ARBs just run out of capital, and maybe that'll happen less now that things are just more capital efficient here with limit orders, because I just think it'll be that way just based on a couple factors. But yeah, you can literally just like put in couple $100 into whatever pool, and then just say like, especially stablecoin pools and like Bitcoin pairs, like you just prey on basically any kind of like price disruption there, and you can just like ARB a profit pretty much immediately, which I think is like pretty nice. But I think it'll make ARB so capital efficient because they can just use the same funds to kind of like ARB every pool. So it's like, if you're really sophisticated ARB, like you probably need a lot less capital, like whatever capital they have now to like ARB all the pools. I think they'll be able to do it much more efficiently, because they can kind of like place a bunch of limit orders in with whatever they're holding. Like if they have a lot of USDT and a lot of Bitcoin and a lot of 10 other assets, they can just like make this giant web of like limit orders and then just adjust those every block. So I hope that we can get that sooner rather than later, and ARBs will start using it, because it makes ARBing more proactive rather than reactive. Because like right now with streaming swaps, which is an amazing innovation, ARBs replace liquidity after it's removed from a swap. So like, you're doing a big, $1 million swap, and it's going to take a couple hours to fill your trade, because after every single swap, someone's got to come in and say, all right, now I'm going to rebalance the price. Now I'm going to rebalance the price. With limit orders, and then eventually rapid swaps, which will probably enable that in about a month, I want to say, after of like confirmed stability for limit orders. What we can do is then say like, all right, well, we know there's enough liquidity to fill this swap right now. So then we can completely cut down the actual wait times of streaming swaps. So we can make streaming swaps is basically instant, because we know there's enough liquidity to just fill a trade because of the order book, where that's not really possible with just the the AMM as it is.
I have a question, and sorry for background noise, guys. Oh, go ahead, Kenton. Finish your thought if you have one.
No, you go. I do have a question, but you can jump in.
Okay, so a rapid swap, right? And sorry for background noise. There's construction going in my house, guys. But okay, so you have intents. Is there a meaningful difference structurally between, like, say, a rapid swap, where essentially you have liquidity that's being matched with like someone's? I guess it's better, right? Because on an intent, you literally have to find a party to trade with you. On THORChain, if you have rapid swaps, it either functions either or, right? Like you get matched, or at the worst case, you're going to execute anyway because it's, you can always execute because there's a pool. Maybe you could break that down a little bit for my.
Yeah, sure. I mean, let me tell you my take on intents. I mean, I think intents are great because they're very capital efficient, because you don't need these big pools of capital. You just need one market maker to say like, okay, will fill your trade for you. But the issue in my eyes is that they interact directly with their counterparty. So to me, like, the AMM exists because the AMM is always the counterparty, and that's always true for THORChain, even with rapid swaps and obviously with any other swap that you do, limit orders, whatever. There's no counterparty ever. But with with intents, you are always directly the counterparty to the market maker or the ARB or the person on the other side of the trade. There's always someone on the other side of the trade directly. So you're directly trading with somebody else, peer-to-peer, not peer-to protocol. So to me, like, I don't really think that, well, obviously you see like issues where there's like liquidity issues, like we saw on like about a month ago, where like all of a sudden all the market makers just like got like they needed to protect themselves, so they pulled out all the liquidity from all the exchanges, and you saw what happened. Like prices crashed, people couldn't get quotes on intents-based protocols, you couldn't use them at all, but all the AMMs like just kept chugging along. So I think being peer to protocol is important just for like stability, in the fact that you don't need that counterparty on the other side. Like the protocol is always the counterparty, no matter what. Even the rapid swap, you're still always going through the pool, because you're always matching against the pool price, not against someone else's like price. So even though like the rapid swap is kind of a function on whether there's ARB liquidity or not, the trade itself always goes through the pool itself. You're never trading with another user directly, and you're not really trading with another user. You're trading with a market maker on basically every occasion. So I think like, and I mean, just like personally, I just don't think it's very decentralized, because THORChain is decentralized liquidity and decentralized custody. Intents are decentralized custody, centralized liquidity, where you're just interfacing with one person. So like I think that there's potential legal problems there. Not that I really want to get into that, but like I think that THORChain just kind of avoids all that just by being the protocol, like that's always the counterparty in the middle, which I think is just important. But it's less capital efficient, right? So it's like there's always a trade-off. Like you're never gonna get like you can't just have an intent system that's totally decentralized.
It's the exchange mullet, DEX in the front, SEX in the back. And like I've heard, I think we talked about this last space, where like some there's still sound in the background. I don't know who it is, you guys. But there's still traders out there, institutional investors, whatever, that don't want to trade with non-KYC volume. And so you would think that would make the intents even more difficult for them to use, like because they're trading with individuals having KYC'd, which I think would be more problematic for them than trading with a decentralized pool. Like if they're gonna get comfortable with anything first, it should be with a decentralized pool, and then with individual non-KYC actors. But I'm being theoretical there.
Yeah, I mean, I agree with you. That's why I'm just like, I think right now is just obviously like a very regulatorily light time, where like nobody really cares that anyone's just interfacing with a non-KYC party, and they're just kind of like doing some chain analytics in the background and being like, all right, like how risky is this for us, sort of. But I mean, I don't know how that actually like stands up over the long term.
It won't. I guarantee you won't. Like I follow the VASP laws in Cayman, and like the Cayman's done like kind of like a 180, try and like improve its reputation around the world. Like so it's actually create all kinds of regulations and stuff. And I think the VASP regulation framework here is like definitely ahead of the U.S. and elsewhere. But it really comes down to dealing with individuals, right? Like they respect the decentralized stuff, but if you start dealing with individuals and interacting directly with an individual, you need to do like KYC and all kinds of stuff. And so And it seems like this is a framework that's being adopted around the world, in the smaller jurisdictions, and then slowly it's going to trickle up to the bigger ones. But and I mentioned this before too. It's just regulatory arbitrage. Like these guys are just going to do it for a few years while they can get away with it, and then once they can't, then they'll stop. But in the meantime, they've made millions of dollars, right? So it is what it is. It sucks, but I wanted to add something else to that. I forget. Anyway, but I want to ask you, Cal, about the limit swaps. Are they going to cost anything more for the user? Like, do you have to pay to enter a limit order and then paying extra type thing as opposed to doing just a normal swap?
No, it's the same cost. I don't think there's any extra costs involved. So you just put if you get refunded, so it depends on where you're sending your swaps from a little bit, because let's say your limit doesn't get hit. There's a TTL, like a maximum time that your swap will be live. So I think it's 3 days as a default. So let's say you just put your limit in there, and 3 days later it doesn't get hit. We need to refund you. So if you send in native assets, if you send in native Bitcoin, then we need to send you out that native Bitcoin, which means there's a gas fee involved. So the same goes with any asset that you send. But if you're doing like a secured asset or whatever, then it's just the Thor native gas, which is like stupid cheap. So it's just gas fees involved. There's no extra fee for doing a limit swap at all.
Nice, cool. Patriot, anything more about limit swaps, or should we move on to Memoless?
Well, I do have questions from the audience, but let's go to Memoless, and then once we're all wrapped up, then I'll do a couple audience questions.
Cool. All right, yeah. So Memoless is live right now. So basically, Memoless is a system where you can pre-register your swap intent for sending in native assets. So you can send them in without a memo. So right now, basically, if you do a swap on THORChain, you need to send in instructions with it, and each chain has different ways to do that. Bitcoin has an op return. Ethereum has its own memo field. Like every chain has just a different way of doing it, but it kind of causes some problems when people want to swap from wallets that don't really support that so well. So what Memoless does is it creates a way for you to register what you say the swap is going to be. You get a reference number. So Patriot, you say oh, mine, what I want to do is I want to swap this Bitcoin for USDT. I'm trying to sell my Bitcoin right now. I'm trying to get out. Or let's say you want to place a limit order. You can do this for a limit order, right? So you say I want to send in my Bitcoin. And it says all right, we got your intent. Your reference number is 12345. And that's your order number. You can verify on chain that it's registered. You can look and say oh yeah, that's my correct memo. That's the address I want to send it to. That's the limit that I want to place it at. I'm trying to sell when it hits 110K again. So I'm trying to get some USDT out. Here's my Ethereum address. Now you have your Bitcoin in I don't know, some wallet like Electrum or something like that. You've been holding it for a while, so you got it in some wallet that just doesn't easily. You'd have to move it somewhere else in order to swap on THORChain or something. Now, what you can do is you can send a specific amount to let the protocol know, hey, I'm going to correlate this Bitcoin that's coming in with this guy's swap intent. So you send in your one Bitcoin. So you send in 1.0001235 Bitcoin, and then it places your limit order for you without any memo or anything. So you can also use the reference memo in your memo itself. So let's say you have a wallet that does support memos, but it's a really long memo. You can register it, which just costs THORChain gas, basically. So 0.02 Rune, it's like a penny or something. You can register it, and then you can just say, all right, reference this reference ID, and it'll just do your swap for you. If it's a really long memo with custom refund address, it's too long for the Bitcoin op return. So anyway, I guess about Memoless, a couple things. It just supports, so right now it's just for gas assets. Once we get router v6 in place, then it will support USDT or USDC or whatever, like long tail assets, which I don't think is actually that big of a deal, because I think that with memoless, I think that a lot of the time I think memoless is much better for like Bitcoin and UTXO chains, which is great. But I think that it's not really as useful for like smart contract chains, because you can just connect your wallet, right? It's like I don't think that people will be using like long tail assets that much with memoless, probably mostly Bitcoin deposits. So I guess that's one thing. But it just basically, what memoless does, it enables you to swap the native assets very easily without having to connect your wallet. So you can just use a QR code and say like, all right, send exactly this much to this address and your swap will happen, or your LP deposit, or whatever, you mint it as a secured asset or something. So that's the basics of memoless. We've been trying to push this out forever. I think that there's room to improve it in the future eventually, but like this is like, we needed to get something out there for memoless and just have a system where people can just send to the network without having to connect your wallet. So that's what's out there. I actually made an API if someone wants to just run their own backend for registering memoless transactions. You can double check the amounts to make sure that the amounts match up to the reference memo. So if you're interested in using that, you can just send me a DM and I'll help you get started for using memoless transactions. It's not that difficult. It's just you need to be very precise with the user and saying like, send exactly this much to exactly this address on this network. Otherwise, like, but the network needs to know that your intent is correct. So you need to be very precise with the instructions. But yeah, that's the basics of memoless. Did I miss anything? Any questions?
Yeah, let's just go back to the exact amount. So I'm retarded sometimes. We got this time for the space mixed up. I'm going to enter in my wrong number on the memoless. Will I lose my crypto?
Yeah,
if
well,
I don't send in the exact number.
So it depends if there's another memo registered with that reference ID. If there is, so if you send it and it hits someone else's reference number, then it's going to do whatever their intent is. So if it's their swap, like they're getting the outbound from that, which is why you need to be very specific in sending the exact amount that it tells you to send. If it doesn't hit any other reference number, it just gets refunded back to you and you get your funds back. But that's why you need to be very specific on the amount and the address, because if it's like sending mail to the wrong house. Like if someone else gets your mail, like there's nothing you can do to get that mail back. It just went to somebody else.
Is there any kind of randomness to the number, like, or are they just gonna sequential? So like if there's more randomness to the number, it's gonna be very hard for somebody to actually copy somebody, get somebody else's number.
It's just not really relevant because you register before you send in anything. Like you wouldn't just send something and then say, oh wait, this is for this person. Like it's like giving your mail to the post office and then saying, oh wait, this is who this mail is supposed to go, or like, and then you have to call them up and say like, oh, this is my mail, like send this to this person. Like you register the intent before you even send any funds. So you say before you even send anything, you get your reference number so you know exactly how to send it. Does that make sense?
Yeah.
Like
yeah,
you're never just YOLOing funds.
No, I know, but I mean, like you go create a trade to swap Bitcoin for Ethereum. I do one, and Patriot does one, and let's say they're all for the exact same amounts. And we're is the number, like the dust number that it has like the that's like the code for the instructions. Are all three of those gonna be completely different from each other, or are they just gonna be one off from each other?
You always get a different number. Like they will be one off if you register them sequentially. So like Patriot Sounds gets number 1, you get number 2, and I get number 3. That will change the last decimals of the amount that I send. So I send 1.000000003. You send 1.0000002, and then he sends that same with a 1 at the end. And it changes just depending on what reference number that you get. So basically the last 5 digits of your decimals are always going to be your reference number that you send in.
Okay. And then of course it would have to be, not only would I have to get the number wrong to match somebody else's, we'd also have to do in the exact same amounts, basically at the exact same time, which is like, it's just so highly unlikely for that to happen.
Yeah, it's true too. You'd have to do it
Okay.
before the other person sends their funds in too, because right now it's only one use. We could increase the number of max uses, but I don't really know if that really helps anything. I feel like there's maybe more of like what you're saying, where there's more room for error. If like, let's say there's 3 uses for an address, and like, I don't know, your Bitcoin wallet rounds the amount or something like that, then your swap just goes to someone else's address. Like, you're not going to be very happy. So maybe it is best to just keep it at 1 use per registration right now.
Yeah, I'm just trying to think how how this can go wrong, right? There's always going to be some edge case or some idiot who just does it the wrong way, and so I'm just trying to protect from that, or how do we address it? Because we like the what we want to market these as being safe, right? You don't have to connect your wallet to a website. You don't have to worry about your wallet getting drained just to do a trade. And so, we want to play in that safe angle. And but if nothing's perfect, so if there are some what could go wrong type stuff, we want to at least be able to bring it up first, address it, and maybe explain it in the UI so that everybody goes into it with both their eyes open. Yeah, I think the simple thing right now is just really stress that they use the exact amount that's displayed on the site is what you have to send.
Yeah, and to be clear, I understand that this isn't the what I think is the ideal memoless experience. And like, the ideal experience is you get a unique address that is just for your swap, and that is how you that's what near intense does. That's what Chainflip does. That's what Changely, ChangeNow does. That's like kind of the gold standard. But on a system like THORChain, it's very difficult to build that in a scalable way. I think that Chainflip's had a lot of problems with their unique deposit addresses. There's a lot of problems when you have to deal with every asset separately. Churns become a nightmare. Like, it creates so much complexity that I think it's acceptable to have this as the memoless version right now, and then maybe sometime in the future revisit and try and come up with a way to have unique deposit addresses, because I think that would be a huge plus for the network. But the complexity of adding unique deposit addresses is so much, and especially when you're talking about like a network that needs to be scalable and stay decentralized, like THORChain, where there's other networks don't really have that same consideration for that. Not that I'm saying they're not decentralized, but I'm just saying they're much more comfortable making those trade-offs. Yeah, it becomes much more difficult, especially when you're like churning funds. You have to observe all these addresses. Like, it kind of becomes a nightmare of like managing all these different things. So I think this is an acceptable UX for now, but in the future, I do want to push to get it to the place where it's just like, okay, here's your Bitcoin deposit address. Send it to this address, and that's it. The amount doesn't matter. Right now, the amount does matter. So this will be like, this is what we have right now. So I think this is just what we need to do, and then we can revisit in the future sometime when we're like in a place where we can kind of go back through the backlog. Like, right now, there's too much stuff to ship out to like try really hammer that down.
No, I get it. It's and so the deposit address is the pool address, right? Everybody be for the 3 days that THORChain has the address for that pool live. That's for everybody will be sending in their Bitcoin to the pool, right? Or no?
Yeah, to the vault. Yeah.
Yeah. So, but to be honest, for me personally, I kind of like that, because I like doing a test transaction right before I do the big one, and so somebody might want to do a $10 memoless swap, see that it works, know they have the address right, and then they're going to go do their $1 million swap, and they don't have to redo the address. They'll be using the same address they used before. So
yes, but the amount matters, and also there's a number of registrations. So like right now, you only get 1 use per registration, and the amount will change, which changes the amount that you have to send. So that's one consideration there. You'll have to register a second one if you want to do a second swap. The address will probably stay the same, but the amount you have to send will be different, because you only get 1 use per registration right now, unless we bump that up. And then also one point that I wanted to make is that, remember, like I said, the last 5 digits have to equal the reference ID if you're doing a fully memoless swap. If you're just using a memo with the reference ID in there, then that's fine. You can send whatever amount that you want. But if you're doing a full memoless swap, the last 5 digits need to be exact. And why I mentioned that is because you said, oh, do a $10 swap. Think about the third digit for Bitcoin. If the last 5 digits have to be the exact number, the lowest amount that you could send in a memoless transaction is 0.001, because there's 5 digits after that to be a full 8-digit Bitcoin transaction. So the lowest amount that you could, I guess the lowest amount that you could send is just exactly the reference ID. I guess that would be possible, but the lowest amount greater than the reference ID that you'd be able to send is 0.001 Bitcoin, which is like $100 or so. So doing a very, very small memoless transaction, I think, just isn't possible with the system just as it is.
Got it. Patriot, do you have any questions?
Yeah, I'm curious, both you and FamiliarCow, what your opinion is. Let's say we have swap.thorchain.org, right? I'm a customer. I don't know anything about THORChain. How do you think is the best way to have memoless as an option that's intuitive for the person coming onto the website to know, like, oh, I don't have to connect anything. This is real easy. I can just do a QR code and bing, bang, boom. Like, we're going to wave a magic wand here and assume memoless is going great. There's no problems. How do you guys envision we should put that? That's just the most intuitive way possible.
Yeah, so I actually built a UI for memoless already, so I have some experience like figuring out what exactly the UX should be. I think it becomes more difficult because you need the exact amount, but I think it's very doable. So I think what you do is you get the quote for, like, you have the user just give you the information. You say, all right, you make sure they're only swapping a gas asset. You give them the quote, they accept the quote. Like, okay, now you need to register the memo for the, so you take the memo from the quote, you register that, and you get the reference ID. Then what you need to do is have them, you need to actually tell them to send a different amount than what exactly they quoted for, because when they're getting the quote, they're not going to know exactly what the reference ID is, because you haven't registered it yet, and you don't want to register the reference ID before you give them the quote, because when they're getting a quote, they might not even like do the swap. So what you need to do is then say, like, all right, you're going to swap, like, 0.01 Bitcoin. Then you say, all right, you're going to swap 0.01. All right, now send us 0.01 0.00012 Bitcoin or something. So you kind of, I have a UI built out. Maybe that was a terrible explanation, but you kind of need to be like, all right, now you want to send this much, but you actually need to send us this exact amount. Here's a QR code for, like, the address. You can also encode the amount into the address, although I found that doesn't work with Trust Wallet for whatever reason. Maybe just Trust Wallet just doesn't support the amounts in the QR code, but it does the addresses at least to help with that. But you kind of need to say, like, all right, I know you want to do this much, but you actually need to send, like, a couple hundred sats more than what you're actually trying to send. That's my 2 cents, because it's difficult because of the amount stuff,
You want me to jump in?
Yeah, go ahead,
brother. You had a question for Cal?
No, go ahead, brother. You're good.
So yeah, I think it's just easier to see, right, and just play with it. And like, so I've gone back and forth with the devs on it, and I've, what makes sense in my mind, what makes sense in their mind. Probably have to find something in the middle. But we're just gonna have to explain it, right? Because just have pop-ups and just have, like, little eyes wherever, just to kind of like walk people through it. But basically what we settled on right now is just going to be like the same swap interface you see that's normal, but instead of connecting your wallet, it's going to say cold swap, and they can explain what that is, where you don't have to connect your wallet. And so the reason we came up with cold swap is that we can't call this memoless, you guys. no one is going to buy memoless swaps. Then it requires way too much explaining what a memo is and why it matters and blah, blah, blah. What we have to sell to people is something simple, something easy to use, easy to understand. And, everyone in crypto knows what a cold wallet is, cold storage. Your wallet is not connected to the internet. And so a cold swap is you can use swap without connecting your wallet to the website. And so the idea is that, hopefully you just heard that and it just made sense instantly. Oh, this is great. I don't have to connect my wallet to the website. I can do this trade without connecting my wallet. This is much safer. It's much better. And so the cold swap as like a product, this will be easier to explain and therefore easier to sell. And this is what we want to promote when we start, doing articles and paid ads and all that kind of stuff, is promoting cold swaps. So it should be really easy to explain, easy for people to understand. And then when they come to the site, they'll see cold swap. Okay, I know what that is. Boom, it's one I want to do. And then from there, it should all make sense. So, this is gonna be part of the marketing effort, is like we're gonna have to teach the world how to do these swaps, right? It's, if you've never heard it before, never know, like maybe you're curious, you'll play on the site and you'll figure out how to do it. But most people are everyone's used to connecting their wallet to a site. And I even talked to somebody, we were talking to some devs for designing redoing the website. And I was talking to them yesterday and just kind of ran, memoless by them and the cold swap ID by them. And like, oh, wow, interesting. But, I'm just, I don't know if I'll use it, but they're just comfortable with connecting their wallet to the site. And so they're going to keep, they said that's probably what they would do. And I think that's what's going to be, most people are going to do. There's, everyone's just used to their, everyone's in their groove, in their pattern, how they do things, right? And so, to change their behavior and get people to do something new, like, it's going to require a lot of selling and promotion. So where I'm going with this is, when we're selling and promoting, by the time they come to the swap interface to place the memoless swap, they already know what they want to do. They're already looking for it. And then from there, it should be easy for them to follow and click through, and it should make sense.
I think that's cool.
Two things that I want to touch on there. I guess first is, I agree that connecting your wallet is almost always a better experience. The only exception for that is UTXO chains, including Bitcoin, because there's just no good Bitcoin wallets, which is crazy to say, but there just really is no good Bitcoin wallet that's an extension. Like, it's 100% true. I think if you've ever tried to swap using Bitcoin, it just sucks. So I think that memoless will be really the major feature there, is being able to swap Bitcoin from any wallet. Like, that's the major feature. It's not sending your Ethan or whatever, or your BNB. Like, I think that's like, you're going to connect your wallet for that. Like, I would 100% do that. There's no reason to do memoless for that. It's really only Bitcoin. Second, what I think memoless is really good for, I think it's really good for minting secured assets. I think that doing the swap is fine, but where I think the flow is really going to shine is using that at, like, memoless. Like, yeah, I agree with you, Kenton. That's just like a technical term for it. It's like, nobody cares about that. It requires too much context. Who cares? But like, what memoless is like a deposit, like how to deposit Bitcoin onto THORChain, how to deposit whatever asset onto THORChain. You just get an address and you just send an amount. So I've been building like my own like desktop interface for THORChain, and it's just THORChain based. Like, there's no Bitcoin support in the wallet. There's no any asset support in the wallet besides for Thor assets. But what it does do is it uses memoless to take in any L1 asset and then mints it as a secured asset on THORChain, which the wallet does interact with. So I think that's going to be one of the best flows for memoless, is you just use it to deposit onto THORChain, and then you use that for your spot trading, use it for Rugi, whatever, and then you can withdraw back to native later. But it's just like, I think that'll be a much better flow than the actual just like end-to-end cross-chain swap version of it. It's like you just use it as a deposit button. Like all Memolist does, it gives you a QR code and an amount for you to deposit your Bitcoin and then trade using THORChain infrastructure. I think that's probably going to be one of the best uses for it.
Cool.
All right, awesome. Sorry, I was just responding to someone. I'm always in different tabs and stuff doing these things. Okay, I think that's pretty good on limit swaps and Memolist. I have a couple questions for you, Cal, and then we can go. I got other topics too.
Sure.
Let me bring it up here. Okay, this is from Artem. Okay, let me see here. All right, so Artem asks, okay, I would like to hear Cal's opinion on the current role of liquidity in the protocol. When THORChain began to lose quotes to competitors, it was FamiliarCow who wrote that THORChain generates about 80% of its revenue from arbitrage and only 20% from retail exchanges. In a conversation with Chad B, I'm sorry, it's gonna be wordy. I'm sorry. In a conversation with Chad Bareford, the idea that liquidity generates commissions from arbitrage bots, even if retail exchanges completely stop, was missed. So therefore, I would like to hear FamiliarCow's opinion on how an increase in liquidity pools, increase in liquidity in the pools affects the protocol's revenue, and if retail trading completely stops, since he has done previous research, and if liquidity in the pool generates about 80% of the revenue from bots, I'm so sorry, it's a long question, then maybe we should stimulate its growth somehow, because 100% incentive pendulum in the nodes directions. In the nodes directions, there is no interest in investing liquidity in THORChain's pools. Sorry, that was a wordy one, but
no worries. Well, there's definitely a lot of different opinions on this. I'll tell you my opinion, and I'll tell you some other people's opinions as well, and then everyone can form their own opinion and kind of give some feedback, I guess. So, I mean, I think with streaming swaps, we know that liquidity on the liquidity just doesn't matter as much for having more and more liquidity. Like if we say I don't know exactly how much Bitcoin liquidity you have today, maybe like 30 million or so in Bitcoin liquidity. Let's just say we had 100 million tomorrow. Like, I guess my question is there any substantial difference? I think that does mean that there is more volume because there's more arbitrage. But it also scales down the yields because you have to pay more. You have to pay more people in that. Like I think that there is like definitely there's less and less returns for growing liquidity. But there's also people who think that we should probably totally stop growing liquidity. Like I'm much more of like let the free market just kind of let it do its thing. People can deposit liquidity if they want, but do we need liquidity? I definitely don't think we do need more liquidity. More liquidity wouldn't lead to better pricing because we have streaming swaps and now limit swaps and very soon rapid swaps. More liquidity doesn't lead to better pricing, and it right now that just leads to longer swap times, which will be completely changed once we enable rapid swaps. So I think more liquidity doesn't actually get us much more. It just gets us more volume, which is, I guess, good for the charts. But whether it actually affects the amount of fees that we collect, that's kind of up in the air. But yeah, I think that we don't really need much more liquidity now as a whole. What I like, especially in the pools that we already have liquidity in, like deep liquidity, what I would like, because it's kind of a general question, but what we do need more liquidity in is like, I wish we could had a better system to grow more pools. Because like right now we're very limited to what we have already, and obviously like the entire focus is on like Rune and the network right now, and I agree that we're not rewarding liquidity providers at all, and that's on purpose. That's part of the design of the network. Like the price is very low, so you need to keep all the yield to the nodes to keep security going, right? You need to keep paying the node operators who actually keep the network decentralized and secure. So I think that there isn't much reward for growing like our Bitcoin liquidity, for example. There is reward for growing, like we're going to have Solana, we're going to have Zcash, we're going to have like new chains that we're adding to the network. We're going to have Ton, we're probably going to have Sui. We're going to need liquidity for that. So it's like we need better bootstrapping mechanisms, I think. But I don't think there's very much about growing our current liquidity that's really going to change. So I guess that's my opinion on it. I would like to, but that being said, I would also like to open up liquidity deposits again. Like I like maybe that's just a hot take, but I'm curious to see what other people think about this, and like tell me, I guess, like post in the Discord like your thoughts or whatever. But I don't really want to forever be at the state where we're just waiting for some god candle to open up liquidity again. Like I would like to be at a fully functional state at some point. That's just my thoughts though, and I'm sure like affected liquidity providers would maybe disagree.
Sorry to interrupt you, Cal. Are you done? Okay, yeah, I agree with you. I've always felt this way, guys. I was like, all right, fine, we're going to keep the synth leverage, fine, but we got to leave the pools open for deposit. I did not agree with closing them for deposit, because earlier this year we experienced maximum pain. That's when you have to fix everything, right? And we didn't. We got to open pools up, and if people want to deposit in them, let them. And if that reduces long-term LP's position, I mean, so be it. Like we can't, it's like hanging on a cliff and there's 4 people on, you're mountain climbing and you fall and there's 4 people hanging on the rope. You got to cut one person off to let the other 3 survive. Otherwise all 4 die. And it's a really tough choice to make, but that's how I view it, it might be the necessary thing for the protocol for everything to recover. And then also it's that gives LPs, a chance to double down if they want, to add more to their position. But how do we know the pools being closed for deposit isn't what's been keeping THORChain back this whole time? Maybe it's because volume spikes, then people want to jump into the pools, right? And that helps deepen liquidity, helps attract, right? It starts getting the flywheel going again, right? The flywheel can't go with deposits being blocked. So if we get any spike in volume, there's no spike in deposits in the pools. So how do we know that hasn't been holding us back? So I think it just, I agree with you, Cal. I think at some point we got to open up for deposits, and we have to move forward. We can't be holding on.
I mean, I've spoken to Alux about this before. He's on the opposite side where he's like, there's no reason to ever open it up for deposits again. I think I disagree with it though. Just based on there's no reason that I want to have the network fully functional at some point. Like it's okay to kind of take our time to do that, but like at some point we're gonna have to say like it's open for business and like everything is at business as normal. So I'm not gonna like push anything, and I'm not trying to like say like, oh yeah, we're gonna realize losses for like LPs or whatever, because I can definitely be convinced anyway. Like I haven't put that much thought into this, but like I'm just saying, I would like to be at the point, and I'm also like saying that we don't really need more liquidity. So that's why I'm not like, oh yeah, we should open up deposits on Bitcoin again, because it's like, all right, we don't really need more liquidity. But I also agree with Kenton saying like, right now we don't really have all like the pumps and levers going in the system, so it's like people can't even deposit liquidity. So how is the network going to grow otherwise? So just like, at some point open it up.
In theory, if the pools are twice the size, we would have much better quotes, right? And like that's been
right? No, we wouldn't have any better quotes. As long as we're at the same price, we would quote for the same. It would just be faster because of streaming swaps. But we're kind of mitigating that with rapid swaps anyway. Yeah, we wouldn't.
Well, your slippage would be half. If the pools are twice the size, you'd be getting basically half the slippage on the same dollar size quote.
Right, but we have a minimum size. We have a minimum slip that we always charge for the protocol. So like we always charge 5 bips, 10, 15, whatever it's set up. I think right now it's at 15 bips. We always charge 15 bips for the swap, like no matter what. So having a greater pool size doesn't actually give you better swap execution. If you completely remove streaming swaps, then yes, that is true, and that would make a difference. But because of streaming swaps, slippage isn't really a concern anymore. It just makes your swap take longer because you're breaking up your trade.
But even when you on the fee experiment, you went down to 1 basis point, we were still missing out on quotes, weren't we? We were still coming in under.
Sometimes, yeah. I mean,
so you're saying the
difference, though, I think.
Are you saying the only difference, the reason why we come under in quotes versus others is because of like the min fees?
No, that's just because of whatever the pool price is. It's like pool price is if the pool price is at one price at $100 million liquidity or $1,000 liquidity, it doesn't change what we quote. The min fee does change, and that will affect it. But like, our quote will be the same whether there's $10,000 liquidity or whether there's $100 million of liquidity in the same pool, as long as the min slip fee is the same. Whether we're losing to another protocol, that's another question, and that's really about the price that we're at, not really the fees that we're charging so much at that point.
I gotta hash this out in my head. So wouldn't if the pools are bigger, wouldn't we have a much better price then on the asset in that pool? Or are you saying the pool size is better for the price of the asset?
Well, the amount of liquidity in the pool doesn't really affect the price. That's just like the price is just the price of the asset. So they're kind of just two different things, I think.
Okay, in my mind, the bigger the pool, the less the slippages, cheaper to trade. So the more accurate or the better the price is on that pool. Whereas if it's a really small pool, the price you're going to quote is going to be much further off because it's more expensive to trade in that pool, keep it in balance.
Yeah, but we quote as if there's only minimum slippage on the pool, which is almost always true because we do streaming swaps. If you're not doing streaming swaps, then what you're saying is 100% true. But because of streaming swaps, that's not true.
Okay. So I just want to ask your kind of maybe thoughts on something. You're referring to liquidity as in like the size of the liquidity pools. In my mind, having the order book, that's a way to increase liquidity with limit orders, limit swaps.
Yeah, exactly.
Do you view that as well or no?
Yes, that does increase the liquidity of the pool. It won't increase the depth. So I guess what I meant to say before was the depth of the pool. Limit orders does increase the liquidity of the pool, but it doesn't add to the depth of the pool. It places limits. It places liquidity that's outside of the pool that can enter the pool based on the conditional price.
Yeah, I think limit orders are going to be what's the word I'm trying to use? Like a synthetic way to increase the depth of the pools. It should increase liquidity. We should get better pricing there.
Yeah, for sure.
But shoot, the guy's original question. Did we answer that guy's question?
I think we did. Yeah, we did. And I have one more. And thanks again, Artem. Shout out to Artem. This is a very thoughtful question that led to a longer conversation. I have my own opinion on this, but because you mentioned Alex FamiliarCow, we're going to have him Saturday. So maybe this will be a great topic we can discuss on the Saturday space. I'd love to hear his opinion on this. But I will move on. This is a much shorter question this time. Artem, second question is, he says he's interested in Nine Realms and FamiliarCow's thoughts on the current and future revenue of the protocol and how testing with minimal fees is going. And could you talk about the results essentially?
Yeah, Sure. So yeah, we've been changing the fees every week just to see what the effect is on just the income and the volume and how competitive we are. And I mean, basic results is the more fees you charge, the more income that we make. Just ballpark. The higher fees that we charge, the more money that we make. Which would tend to indicate that most of our volume is inelastic to the price. And even though we lose out on like retail swap volume through aggregators and things, is actually more than makes up for it through like the different arbitrage volume. Now, and so that's also true on the very low end. So we dropped fees all the way down to 1 BIP a couple of weeks ago. So that's 0.001%. So very, very low fees. That's the lowest we could possibly go. And we did win out on a lot of volume. Our volume went up. Affiliates made a lot of money. THORSwap made a lot more money from us because we were winning all the quotes. But if anyone is a bond provider, you probably noticed your APYs were like pretty close to zero that week. Like the APYs were absolutely terrible because all of our fee income, all of our income comes from swap fees. So Yeah, we did win out on a bunch of quotes, but and we won quite a bit of volume, but we didn't actually like get much out of that. And I think just like for the health of Rune, I think it's important to keep Rune APYs like very healthy, and not just like healthy, but like abundant. Like I think that if you really want to make Rune an investable asset and make it attractive, like not only does it get more attractive the lower the price goes, because obviously just like the better risk reward, I think, when you're like considering buying something, but like if it's in a low price and it's like a 20% APY, that's like a pretty attractive thing to have, which is like where we're at right now, right? Like Rune has been yielding 20% for the last like, I don't know, 2 months or so. And anyone that's a bond provider is probably pretty happy with the APYs they've been getting, and it's been absolutely terrible when we drop the fees down low. We do win more volume, but there's a very real cost to that. Like other like swap services, they have zero protocol fees, and they actually subsidize. They subsidize like these quotes, right? Like they run these services at a loss to outcompete us. Where I think that like it is important to pay attention to competition and to not like totally lose the plot there. But it's important to keep the ecosystem healthy and robust and keep income coming in, like to keep this ecosystem growing. And so that's where I'm at with it. I think where we'll actually end up is somewhere around 10 to 15 bips. And what I would like to see actually, and what we've talked about doing, like the devs have talked about doing, is implementing like a dynamic fee system that changes the fees based on the amount of volume that we're getting. So like, all right, so think about this, like on really slow days, there's no reason to charge a very high fee. Like on really slow days, you want to stimulate volume and keep volume coming in. So you want to lower the fees when there's really not much happening in the market. Like you see it like every weekend, basically volume just dries up. Like it's super low. And then during the week, things start going and we start collecting. And then every once in a while, there's these crazy, crazy days where there is just like a lot of market volatility. And the volatile days are like what THORChain absolutely thrives on. So what I think is like the long-term solution to this is after the fee experiment ends, which it'll end in like 2 weeks or like a week and a half about, we'll set the fees probably like I'm gonna like if I had to just say a number, I would say 15 basis points is like a pretty fair number to set it at. I think that's very healthy, like just for yields and things. Although we could set it to 10. I mean, I'm really not opposed to anything, but anyway, we set it to something now, and then later this year we implement a system where we have a sliding scale between, call it 5 on the low end and like 20 on the high end, and we make it really hard to get to those endpoints, but then it fluctuates much more throughout the middle. So that way, like on really low volume days, we drop like all the way down. We charge the lowest fees possible. We undercut, but when volume starts increasing and users, especially on those like crazy days, I'm sure you guys have experienced, like those are the days where you make most of your fees, and that's where the most price insensitive users are, because there's just crazy arbitrage going on just across the entire ecosystem, because there's just so much volume spinning around. So that's when you can charge a lot and you can like really make most of your fees on those very volatile days. So I think it makes sense to have a system where you're charging very little on the slow days and you're charging a lot on the high days, and most of the time you're just kind of in the middle. So yeah, that's the thoughts on where to go with the fees. I'm curious to hear people's thoughts on like how yields have been going. I've been pretty happy with just bond provider rewards right now. I think it's the most important thing to keep like Rune a good asset. Like we need to make Rune attractive, and the people that, and not that I'm saying it's a wrong perspective to say that, oh, you want to compete and you want to win, but you also got to know what you're competing against, and like also like there's no reason to undercut ourselves and like sell ourselves short. Like we're not doing ourselves any favors if we drop the Rune APY to 2%. Who's gonna buy and bond and like want to be part of the ecosystem, right? So it's important to keep things sustainable, and then like over time, like I do think this will take a long time, because obviously we have a lot of work to do still. But you know, as we'll just continue offering our services, Rune's a deflationary asset where all of the yield comes from organic fees. Like there is something special here, and we just kind of got to get back to it, which will take a long time, but we just got to keep it sustainable and very attractive in the meantime. And that's like, I think that's the best thing that we can do.
I agree with you, man. I'd love to see yields on nodes be consistently double digits. I think that's really important. And I love the idea about changing the fees based on high volume, low volume days. I'm curious, there's a guy, I'm sure you know who I'm talking about. He's been in Discord, I think it's Crypto Actuary. He's been, for a long time now, he's been saying to have a sliding scale on the fees based on the dollar size of the trade. And basically invert it, like on the smaller trades, charge cheaper, on the larger trades, charge more, you know, where we have like more, you know, on those lower trades, you know, we don't, where there's more competition, we'll charge less. On the higher trades where there actually is less competition and we get more of that, we'll charge more. Have you thought about anything like that?
Yeah, I mean, that's another possible solution as well. I think it just that requires more fine tuning though, where like having the sliding scale just kind of like it seems easier to maintain and to just set it in one place and it just kind of goes rather than like having like a fee schedule sort of thing based on the size. Like it's not like I hate the idea, I just don't love the idea. It's just like, all right, then we got to determine like, all right, what sizes are we cutting things off at? What are the fees at each? And then like our competition changes too, like depending on the day. So it's like we make a lot more money on bigger swaps than small swaps. So and you know, competition is increasing for that swap size too. So I'm not like I don't hate it. I just don't love it. And creating the fee schedule, like someone, a lot of care needs to be put into that. I think it's easier to just have some kind of like fee adjustment formula and then just kind of tune that versus like, all right, well, you know, we need to drop from 8 bips to 5 bips for like, you know, the 100K plus swaps to 150K. And then how do we adjust the 150K to 300K? It's, you know what I mean? It's just like, it seems like a lot of managerial work where we just kind of want a more standardized system, I think. And I just don't love having different fee tier ideas based on the size. I don't know whether I'm alone in that or not. It just seems like it doesn't seem very anti-fragile and scalable to me. Like it seems like a lot of maintenance work that we'll have to do to like, you know, make sure that everything is looking good. Where the other one, we can just kind of like, all right, the system as a whole, is it working? Rather than looking at different fee buckets and swap sizes. To me, it just seems like a lot of work to do and to really figure out and to tune.
Well, I appreciate, I mean, nobody wants to do make work projects, but times it's not about the amount of work that goes into it. It's like, is it worth working on or not, right? So something I'm been wondering about, like, you know, Binance is huge, Coinbase is huge, Hyperliquid is now big deal, and they'll do something similar. Like they all have tiered fee structures. And I've been thinking like, why don't we have that at least for trade assets? You know, for the arbitrage bots and market makers, where they can have a similar fee schedule, something that they're already used to seeing. What if we did something like that on just trade assets and left L1 swaps by themselves? And then on the trade assets, the idea is that we get more volume, more activity there, get better pricing, so we get better quotes, so we attract more volume on the L1 trades. Have you guys thought of anything like that? Or you just disagree with something like that?
Yeah, I mean, you could drop trade and secured asset fees lower. I think that, I mean, again, like a lot of the volume coming through THORChain is ARB. So you charge them more, you make more money. It's pretty straightforward correlation between the two. Yeah, our pricing might be slightly better, but like, I don't know, it's all just trade-offs, right? And it's like, I can't say I'm like strongly opinionated one way or the other. Like any of us could be very convinced, like we just need like enough of a push to do something, you know, if we really want to change things.
Yeah, that's what I'm wondering. You're right about trade-offs. I get it. Kind of what I was wondering too, and I'm just thinking out loud. This isn't like I'm saying this is happening for sure, but let's pretend we actually do increase our fees and we keeping them high, because we are okay with losing out on the lower end volume. But then that just somehow gives our competition more room to grow, and they just slowly keep inching up their volume and slowly start taking away larger and larger trade sizes. We're still getting volume, but it's more on the higher end, different trades, and we just stick with our higher fee model. And we might keep our percentages up, but our volume just keeps slowly going down or sideways. We're the others, their volume is going up. Do you think that dynamic could happen and just slowly over time eat our lunch, and that there is a trade-off to we do want to maintain having some volume, even if we have to get paid less for it now because we want to maintain market share, I guess is what I'm trying to say.
Yeah, of course. And that's the whole thing, is how do you balance that enough to keep things healthy, right? Like that's literally the entire question that we're trying to solve. And yeah, I'm not saying if we wanted to dry up volume, then yeah, put fees to 1%, and then we just get almost no volume, but we charge a lot for it, so we make more money. That I don't think we would be very happy in that situation. So I 10 to 15 bips seems like I feel like that's a reasonable place to be for now. We'll put it there for a while, we'll monitor, and then we'll implement some kind of dynamic system. Then we can always tweak it. The whole point is that all these things can be tweaked, and we can adjust to whatever circumstances come our way. So we just have to balance it. And if we notice that things are getting too far out of hand, then we need to change something. So yeah, we have all the tools to do that.
Yeah.
So I'm really, that's why I'm not too worried about it. It's we're not going through any door that we can't ungo through. So yeah, that's why I'm pretty confident in this approach to just adjusting the fees, and we have the tools to adjust them again. It's it really has. I don't know if you guys have. We're at 25 bips for a week, and things were going just fine. We made our volume was lower than when we're at 10, but it's not zero, and it's it's actually not terrible. It wasn't the best, but it was better than I expected for sure. So and meanwhile at 1 bip, we could win more volume. We're still not winning all of it, mind you, just because anyone can come in with a quote on another protocol and they get that swap. But we also made no money. So,
and this is, and mind you, that's our fees. That's still on top of those fees are still the wallets and interfaces charging their affiliate fee, 50 to 150 basis points, right? And so my hope is that we get our swap interface going, and the volume in our interface is just dwarfs all of our partners in volume, and then we have real pricing power, and our partners' volume is a nice to have, like a nice call option, whereas the majority of our volume is going through our site with no affiliate fee. Then we have really much more control over the fee we charge. Yeah. So
100%.
Yeah, so our fee at whether it's 10 basis points or 25 basis points, we're still 1% cheaper than Ledger. We're still 0.7% cheaper than Trust Wallet. So yeah.
Yeah, and so that was kind of the point I was trying to make a little bit with when we were at 1 bip, the affiliate fees just went through the roof because we were charging nothing and the affiliates are charging all the money. It's where I guess where I'm trying to go with this is, we need to shift it more to be in the favor of the protocol and not just give away all of our money to the interfaces. People are doing plenty of swaps with these interfaces that are charging way more than 1%, and they're making a lot doing it. And yes, they provide a valuable service, but it's there's no reason to not try and capture as much as that for the protocol as we can for the good of all of us, rather than for any specific interface. Because obviously they've been very they made a lot of money off THORChain, but it's not it hasn't done benefit for the protocol itself as much.
I'm going to jump in real quick because we do have InstaSwap up here, and I do actually have questions to continue this conversation you guys are having. It's a dope conversation. But InstaSwap has a question regarding Memolist, so I just want to give them the floor real quick. InstaSwap, you want to go ahead and check your mic and proceed? You might be muted. I just chatted with you in DM. InstaSwap, can you unmute yourself and check your mic? And I'll give you a few.
I just want to say, wait, one sec. Is that Kristen in the audience with a fake mustache?
Let's see. Where I don't see that person.
It's wearing. All right, I see you. I see you.
Okay, shout out to Kristen with the fake mustache. Oh shoot, Insta Swap just dropped. Gosh dang it. Okay, all right. Well, I'm gonna have ask a question, then we'll get Insta Swap back up here. So, that was okay. They requested. They've been so patient. I want to see if we can get to them real quick.
Yeah, and if there's anyone else that wants to come up too and ask, I'm here. So
yeah, and FamiliarCow, thank you for your time, and again, thank you for joining an hour earlier than you were anticipating, and that was kind of an interesting beginning, but we got through it. InstaSwap, go ahead and check your mic at any time. I want you to go ahead and get your question answered. Your hand's up. Go ahead.
Yep. Can you hear me?
Yep. Go right ahead.
Okay, just a small question to Familiar and a suggestion for Kenton. The suggestion is keep it short and maybe not cold wallet swap, maybe walletless, like we call it on InstaSwap with Chainflip. And the question is, what happens if two random people initiate a transaction, but due to the fact that I may have my Bitcoin, let's say, on Binance, and I request a withdrawal, and I don't calculate the fee, and the amount that I am sending was requested from Kenton's transaction. Let's say that me and Kenton are performing two different transactions, and my amount matches Kenton transactions. What happens there?
yeah, I mean, if your amount matches someone else's reference ID, then their reference gets executed. So if you send in, if your wallet rounds your amount, if you send the wrong amount and it matches someone else's reference ID and it's to swap to their other wallet, like your funds are getting swapped to their other wallet. So if your amount matches someone else's reference ID, like that's, you know, the exact opposite thing of what you want to happen. Like you always need to register your own transaction first and double check the amount. I would never send from a centralized exchange. Yeah.
I know. I'm just bringing it up to this because on our previous service, when we were a centralized swap service like Changely, a lot of people messed that up a lot of the time. But on each transaction, we provided a different wallet address. I'm not sure if that's possible with THORChain, but would be
Wait, sorry,
interesting.
repeat that again.
Yeah. We used to, as a centralized swap service before, we used to provide a different deposit address for each customer. We generated a new one every time, and I'm not sure if that's possible with THORChain because it would solve that uh, transaction example that I gave before.
Yeah, it's not possible right now, but it is something I would like for the future. It's just not feasible right now. The reason it's more difficult is because of scalability concerns, churning. It just creates so much complexity underneath the hood. But I do think it is. I think you are 100% correct that it is a better experience for just not having to send the exact amount, which is why like I want to keep this option open and for us to revisit it at some point. Although like shipping this out as like in a V1 basically, and then maybe one day coming back and doing this, open up a channel, like a unique deposit address. I think that's a better experience. Why that is more difficult? Because all right, well, first off, you need to have like thousands of addresses that you're observing, and which becomes like very difficult on just like the scalability, like DevOps side of THORChain, and creates like attack vectors and like having to monitor thousands of addresses. Number two is having to consolidate those funds. So you need to sweep those funds into the main address. So you need some like additional logic to not only scan all those, but you need to then move those funds back to your main vault address. Number three, it's very difficult. It's easier for Bitcoin because you can just do that in one transaction, I guess. Like you just need to sign once and you can consolidate all your UTXOs. But on let's say you're doing it for like, USDT, like what are you gonna do? Like you're gonna have to send ETH to that address and then like send it out. Like that becomes very difficult. So it's like all the different chains add more complexity. I think I would like to see it just at least just for the UTXO chains, like having some kind of unique inbound deposit address, but it won't happen that's not part of the current design of Memoless. But I'm hoping that we get there eventually. But that's some of the reasons why it's just not part of the system today.
Yep, I think that was it. Fully covered, and I hope the current solution scales. I believe it can, but I always suspect that there will be someone that messes up with his transaction. That's for sure.
I appreciate the question, Instant Swap. I have a personal question regarding the fee structure. I've loved the experiment. This is something that I've had a lot of ambiguity in my mind. FamiliarCow, like, what if we did this? What if we did that? What would be the volume? What would be the fee? So this has really cleared up things. So shout out to you and Nine Realms. I think this is a great idea. I'm curious because I know someone's going to ask me this later, so I'm just going to ask it now. When limit swaps is going well, a month or 2 months from now, we got rapid swaps, right? Which is basically like intense-esque. We have this different infrastructure. Would it be worth repeating the min bips experiment again? Could you answer that?
Yeah, I mean, I don't think so. I think that the results will just be the results because everything. So we're not much is really changing about the core architecture of the network. What rapid swaps does is it makes long streaming swaps much faster, and that's really the main thing. I don't think our quotes. I am curious to see what happens with our quotes and stuff, but it doesn't really change the core fundamentals of there's this much volume and there's just this much fees. So I don't really, we could run it again. Sure. I really have no problem just continuing to tweak, and try and figure out where the best place is. I think that we'll just in a couple of weeks, we'll just say all right, I think we're pretty happy with it here at 15 bips or something like that. And we'll just set it there for a while. And then, if things look like they're not going so well, then maybe we move it. It gives it, we have a lot of flexibility. So it's we don't need to be too set and oh yeah, we said we're going to do this and now we're just going to stay here forever and no one can change this. The fees are pretty easy to change now. So, yeah, I don't we could run it again. I don't think that you really need to. I think that it'll be fine, but
yeah, that makes sense.
What about
Go ahead,
Patriot.
Go ahead, brother. All good. Sorry.
What about so your fee experimenting has been 1 to 5, 10, 15, 25 points, and it sounds like it's 10 to 15 basis points is sweet spot. What about just refining the iteration, doing 10, 11, 12, 13, 14, 15?
Yeah,
seeing how that goes.
If this was a experiment that was very scientific, then yes, maybe we would try and find the exact value. I mean, the thing is this is a experiment that we're conducting in a live market with unlimited variables that we can't control for, and it's much more of a I don't want to say a vibe check because it makes it sound maybe a little too unscientific, but it's just where we think is the right answer. We're gonna have to just continually test our own conclusions on this as well, because it's there isn't going to be a scientific answer that comes and says oh yeah, so 11.25 is the proper fee to maximize this and that. It doesn't really exist because we're operating in the arena. There's no you can understand there's not just all these things that we can control for and test against and tweak everything out. It's just we're in the marketplace. So yeah, hopefully that answered your question enough. I just yeah.
It does. No, I understand. It's not a controlled environment, so it's impossible to replicate the same conditions between each different fee. So it's impossible to truly know which is better than the other, right? It's a real.
Yeah, and it depends what your goals are too. It's everyone has to obviously we don't you could just say, oh yeah, let's optimize for fees and just crank them up, or you could say, oh yeah, let's optimize for market share and crank them all the way down. And then it's all right, well, you're in the middle. It's what's your ratio of how you say where's the optimal point of the middle? It just it totally just depends on how you view things and where you think it's reasonable to be. So that's not even a totally defined area. It's not it's a calculus equation where it's the highest points on the integral. It's gonna be a little bit more eyeball-y than that, I think.
Yeah, for sure.
We will have an analysis that comes out. We will have we have Ray and then an analytics person from Nine Realms who will be putting together like an analysis of their interpretation of it. This is my interpretation of it as a non-data scientist, just someone who is, been around THORChain.
So have you guys thought about, is there a way to do where you could have like, if I own 1,000 Rune, I get 10% off my fees. If I have 10,000 Rune, I get 20% off, whatever. Like, is it possible to do something like that?
Yeah, sure. 100%.
Oh, okay.
We could change any of that stuff. Like, we've even talked about like, oh yeah, if you have higher swapper clout, like that's kind of a proxy for like, for volume, right? So you could just say like, oh yeah, but then you're also just kind of adjusting those same knobs without really you're just kind of backhandedly adjusting them for certain people, like because there's a couple arbs that do like a lot of the volume, right? So it's like if you just say, oh yeah, if you have this much swapper clout, then you pay 1 BIP in fees, then it's like, all right, well, there's like 2 guys who you pay like that much fees and they do most of the volume. So you might as well just turn it down for everybody. I don't know, that's like all these things like are just completely open questions, which I do not have an answer to. But we've talked about it. I'm wondering if people actually have like interesting opinions on it.
I think so. I mean, like swapper clout is just based on volume, right? But you could have like, a large bond provider or whatever, just a whale or somebody has a lot of Rune and they only do 1 or 2 trades a year, but they're they're THORChads, and would be great to give them a discount, if they're especially if they're long-term holders, and that would incentivize and reward people owning Rune. Yeah, I think it's worth talking about.
I mean, I definitely think it's a good idea to make owning Rune rewarding and TCY, like I think that those are like, I think that it doesn't make sense for the context of like, oh yeah, let's figure out the fee situation. But like in context of like, why should I like own Rune? It's like, all right, yeah, you can use this decentralized exchange for, a discount or whatever. Like maybe that is a good benefit.
Yeah, because I've been thinking about like, for market makers, arbitrageurs and stuff like that. And like, like going back to Binance and Hyperliquid's fee schedule, like you have to own so many tokens and have so much volume to get the discount. And I know Chad has been kind of against it in the past because he doesn't want the the arbitrageurs to have to tie up capital in a token, which I get. I do appreciate that. But I mean, Binance and Hyperliquid are doing just fine, forcing people to own their token. And so I was thinking force people to own Rune and TCY. And that'd be a good way to get, TCY out there and talking about people holding it and creating a demand center for it.
Yeah, I guess my biggest hesitation is like getting the rich richer type thing where it's like, all right, these arbs are, they clearly have a lot of capital and they're probably doing pretty well if they've been arbing for so long, and there's a lot of good opportunities just for arbing on the network. So it's like, all right, so now we're going to create a system to reward these arbs who, you know what I'm saying? Like if it's some kind of like I would like to reward like the people in the community, not like like the 5 like major arbs of the network. I have no idea how many arbs there are, but I'm just saying like there's relatively few arbs compared to like how many people are in the community or interested in the project.
No, you're totally right, and we want to keep it open for other arbs to come in and compete, right? So we're not reliant on 2 or 3, right? And there's a healthy competition between them all. Absolutely, I totally agree with you.
We do have a new speaker, you guys, and shout out to Koitsu, one of the best educators and customer service troubleshooters, I think, in our entire ecosystem, right up there with Sam Yap. He does have a question, so I'll go ahead if you want to check your mic there, sir, and give you the floor.
Yeah, hey guys. This is a question on behalf of a user in the THORChain community Discord, and it's a bit of a sensitive topic, but it has come up many times throughout all of the THORChain ecosystem Discords that we've seen. And the question is as follows. Will there be a situation in the future where LPers will no longer have their assets manipulated by synths, or will THORFi leave a permanent scar on how LP valuations work?
Yeah, I mean, so the current plan, as it says in Prop 6, which I guess we can debate on whether we agree with this or not, is to not touch synths for now until Rune is a certain price. We call it $4 or something, $5, and then we can like remove synths from the network, give all that value back to LPs, and then we open up the deposits again. I don't know whether, like, I mean, I don't know. And we talked about this a little bit before, so like, I don't want to rehash it too much, but like, I am not like in the camp of like saying like, oh yeah, you guys are not going to become whole or whatever. But I also would like to open up LP deposits at some point. Like, I think that waiting until like a certain price is just going to be. I mean, it's going to be waiting a long time, and I would like to get to a fully functional state before that. But that also comes with the trade-off of like, all right, they kind of realizing LP losses too. So I am kind of not really in one place or another. I'm just like, all right, just let things be for now, because touching less knobs is just better in general. So I don't have a strong opinion. I would say yes, at some point we will get rid of synths. Like, it's just not going to be there forever. But when that moment is I guess the question that's up to the community, and no one's really strongly voiced like, hey, we should turn them off now. Turning them off now would basically realize all of the LP losses from THORFi, which is, yeah, I mean, and I think everyone understands what that means. So if we're ready to just call it and do that, I think, and maybe it's a little premature for that, but at the same time, I would like to, I would not like to be in the position where we're just paused on LP like forever, indefinitely, until we hit a certain dollar price. Like, I think that's also kind of ridiculous. So I would like if there was a middle ground there somewhere. I don't know what the answer to that is. Maybe if people want to put their thoughts, I'd like to read them.
Well, the middle ground
about that too.
Oh, sorry, Koitsu.
I'm curious about that too, mainly because I don't have an LP myself, so this doesn't really affect me, but it comes up a lot. And I do ponder, like, kind of what is the point of providing liquidity to THORChain right now other than bonding Rune, if all of the LPs are in this, okay, I can't say all, but many of the LPs, especially the two big ones, BTC and ETH, are in this particular situation, no deposits. And we understand why there's no deposits, but how, I understand it's an issue of like how long, but it's a frustrating thing, because I know of people that come into our chats and they want to deposit into any kind of asset, and it's kind of like we have to tell them, well, you can't right now.
Yeah,
things are kind of in a bad situation right now. And they're like, well, how long will that last?
Right. And it's like indefinitely, right? So it's like I also am not satisfied with that either. But at the same time, I don't want to be the person, or like, I don't know, I don't want to support like oh yeah, we should just realize these other people's losses, So it's like, I don't know what the best solution is there. I wish like someone would come forward with, I don't know, maybe not even a proposal, but like just have the conversation about it.
Yeah, you know what? This is good. We've got a chink in the armor here. This is a very important topic. And Alex, he has a very strong opinion on this on Saturday, Kenton. And FamiliarCow, you're always welcome, of course. I think this may be a really good conversation to have on Saturday to give some clarity and see if we can get some consensus as a community and move this forward. This is something I think about a lot too. Kenton thinks it a lot. Coit, you hear it all the time. I hear it all the time too. And I'm an LP myself. So, this is something that I think is a good topic. So maybe we'll kick this to Saturday, because we did talk about this extent. I think it was like that 55-minute mark or something like that. So yeah, why don't we do that? Let's Saturday, of course we'll have Alex give him our update about Maya protocol, that stuff. And then we can really get into Prop 6, the nitty gritty, the LPs, and then maybe try and get some clarity for these guys who are in limbo, or the people who are excited and they want to become LPs post THORFi. I think that's a good thing we could do.
I agree with that. That sounds like a great plan.
Yeah. I really, honestly, I wish that we just gave them TCY and then we weren't in this situation right now. But, that's definitely not a decision that I was trying to get into the middle of or anything. I'm pretty ambivalent. Like there's two sides of it, so it's like, we got to find the solution that, optimizes for everyone's needs. And, the protocol doesn't really need liquidity right now. So it's like, I definitely don't want to be in the place to say like, oh yeah, we should realize losses or whatever, for so people can deposit like, $20 into the Bitcoin pool. I think we'll be okay for the time being.
Yeah,
no, I understand your point, Cow. Yeah, I think it's well, we can't rewind time and change what all happened, and nodes voted on P6 and it passed, so that's how this protocol works. And but we can always amend or change things in the future to try to, if we can figure out a solution or something that would better LPs. I know down the road, as things kind of change and Rune price goes up, things will get better. But and you guys have been talking about it today. All the cool stuff that's been launching. You guys have been workhorses. It's amazing. But sometimes people come back and they go, well, when's Rune going to get back up to like $1? It's like, man, I can't predict the market. So anyway, thank you very much, sir.
Yep, exactly. Yeah, I mean, I feel you. Like, there's no clear reason. I mean, there's no clear direction. So I feel like in the absence of any clear direction, it's best just to sit on your hands and just not do anything. That's kind of like the general direction that I seem to take whenever this stuff happens. Like, yes, I would like to open up LP deposits, but I would also not like to do that. So maybe just do nothing.
Yeah, you know what? I sort of have the same opinion because it's not crucial right now. When you have Ruggiero that's about to get started, when you have Mocha starting to get going, you got rapid swaps coming, all these crazy innovations. It may not happen. We may have to make difficult decision, but I would love it, you guys, if we could have the narrative where we were able to pull LPs out of this hole. That would be one of the most incredible comeback stories in financial history of any system ever. Maybe that's unrealistic, and maybe it's totally realistic. Time will tell. I'm not going to tell one way or the other. But if we could accomplish that, that would be utterly amazing. But yes, I'm open to either one as well.
Yeah, and I think we can only do that by making sure that THORChain just stays in place, stable, and does what it needs to do, and we make Rune great. We make it a high yielding asset. It's deflationary that generates high yields. It's very unique, and I think we all know that. That's probably here already. So maybe I'm just speaking to people who already know this instead of evangelizing it. But it's very unique, and it does something very different than even what competitors. I don't want to even say competitors, because I don't really think of people who offer cross-chain swaps as our competitors, because they do very different things in a very different way, and they serve a different purpose, I think. Things protocols is very unique, and that's why a lot of us choose to spend our time here and to work on it. So yeah, I mean, that's my 2 cents on all this stuff. Glad you guys invited me out. Oh yeah, one more thing. I kind of tweeted on this on Halloween, and I mentioned it a little bit earlier, but I have been developing a Rune Tools desktop app, which I'm looking forward to maybe releasing soon. It's basically ready. I mean, I could release it today if I wanted to, but I'm just tweaking on it. It's a Rune. I mean, the TLDR. It's a Rune only wallet that uses memoless for native asset deposits. So you deposit, use your QR code, you put in Bitcoin, you get secured Bitcoin on THORChain, and then you can manage your bonds. You can, I guess, not really add to an LP, but you can do swaps. And then maybe I'll add some Rugi stuff, whatever. So I just wanted to make something fun. It's been something fun I've been working on. So
I shared it up top. Is that what you're talking about?
Yeah, that's it. It's kind of like AsgardX if AsgardX was just for THORChain and Rune. It doesn't have Bitcoin wallet support in there or whatever. You just use memoless to deposit your Bitcoin into there and get it as secured Bitcoin and to do native asset swaps. Manage all your Thor assets and whatever. So
try it. It's rad.
You heard it. You heard the man. Koitsu is a major force. And when things are rad, he says they're rad. They're rad, you guys. This guy debugs everything and tells people how to fix their products all the time. I'm constantly seeing his posts like that. So if he says something's dope or rad or cool, listen to the old man and use it. Okay, that's how that works.
It's not out yet, but I'll send a beta to Koitsu to check out and get some feedback before actually releasing it. Yeah, I've been wanting to do something like this for a while.
Jeez,
so.
Denny, jeez.
You know how I do it, buddy. Cool. FamiliarCow, Mr. Sir, you have given us so much of your time. I really appreciate it. And I was thinking, I know you and Chad are busy, but if there ever was a Thursday where you guys could come back and do one together, that would just be the ultimate throwback to the old days of the spaces where it was you and Chad, right? That would be freaking sick. I know you guys are busy. I don't want to put that on you, but I just want to put that little idea bubble in your mind. Okay. Cause that would be a total honor to have you guys both as speakers on one space. Cause yeah, man, that would be flashbacks for me.
For sure. Maybe when we get rapid swaps turned on. Today would have been a good day for it, but unfortunately Chad couldn't make it. But we will do it. Yeah, it's always a good time. So thanks for having me, guys, and thanks for listening. And yeah, that's pretty much it.
Okay, brother. I know you sound like you gotta go. Real quick, is there anything else in the future that you want anyone to know, or did we pretty much cover everything?
Let's see, Router v6, which we very briefly touched on, Solana, Zcash, all this Ruji stuff that's happening. I don't even know what's happening on Ruji. We're just trying to make sure this thing is stable and working, and it's going. So thanks everyone for your support. Feel free to always ask me questions or whatever. I'm around, and yeah, we're still here. We're still kicking it. So.
That's damn right. We're still kicking it, man. Dude, thank you so much. You're a freaking legend. Thank you for coming up on short notice to replace Chad. I really hope we do this again soon. You're a legend, bro. You don't need me to say that.
Sweet. All right. Thanks so much, guys. Catch you later.
Later, brother. Well, this is I think this has been a very good space, and I'm really glad you came up, Koitsu, to mention that users' feedback, because this is something that has been talked about for a long time. So let's just take it head on and let's figure it out and have a good conversation about it. I think Saturday would be a great time to do that. I don't know, Kenton, did you have anything else you want to add or anything like that?
No, we can wrap it up.
Yeah, I think this has been great. Yeah. Okay, guys. Koitsu. Okay, well, one more time. Koitsu, do you have anything would you like to say before we wrap up?
No, but thank every THORChad that's been sticking around all this time. Anybody that's got an LP that's down, anybody that's got TCY that had savers or lending and feels kind of meh. If you're still with us and you're still sticking with us, please just stay the course, man. Like I think we will get out of this. There's so many things that are going on right now, not to mention THORChain front end. I mean, all that stuff. There's so many cool things going on right now that now would not be a good time to quit the project, in my opinion. Stay the course.
Dude, thank you so much for saying that. Here's the problem as the co-host. Okay. If I say something like that, when it comes to someone who's listening to the recording, listening live, they think that, I'm someone who, I'm going to tell you that because I'm trying to sell you something. I'm trying to push this idea that's going to be okay. Whereas maybe I have doubts. And I just want people to know, I try to be, I want to be intellectually honest as possible. I don't like to sugarcoat things. And I hope, me taking that question directly head on Saturday is a demonstration of that. I totally agree with you, Koitsu. I feel really good. I think the first principles are solid. I have never been more excited for THORChain's future than I am right now. Everything feels good. Lending, savers, that caused so much consternation in my brain, so much ambiguity, so many questions. I never really was comfortable with it. But now that it's gone, despite the laggard effects of the pain that people are in, I think the vision is so clear. And I mean, you've got Mocha, a point of sale application. There's other point of sale applications. We've got Rujira. They're building all kinds of amazing things. I don't know if you guys saw on Rujira, they have a huge increase in infrastructure capability now. So things are going lightning fast. Our boys are cooking over there. I feel really, really good, you guys. I'm feeling so good. But, don't assume success. Don't assume failure. We just keep our heads down. We execute. We take it home. We win. No pessimism, no optimism, just raw execution. We keep doing what we're doing. People keep showing up for things. We keep helping Rujira. Rujira keeps helping us. And I think we're going to pull through. I feel really good. So thank you for saying that, man. Because I feel like when I say it, it can sound a little superficial or hollow because I'm the host and people expect me to say that. You know what I mean?
You're welcome, sir.
Yeah. And again, guys, this has been an open stage. If any of you have any questions, good, bad, or good comments or bad comments, we don't censor anyone here unless you're a troll. Please next episodes, please feel free to come up. We will make sure you are heard to the best of our ability. Thank you everyone for attending. Okay, guys, this Saturday, we're going to have Alex with Maya Protocol. We're going to be chatting about all things like that. And then the next Saturday, I'm not sure. We don't got anything. So I've been trying to find some people on Tron to join it. I've been not having success like that. So if people want to maybe try and help me crowdsource some groups, some topics, maybe we'll talk to an interface. Maybe we'll bring up Rujira again. I'm not sure. Maybe Kenton, do you have something you want to say?
I was just I've been thinking too, but my mind's been elsewhere and other stuff. But if we can't find a guest or a topic, we can just do an open forum, open mic, and come and speak your piece. If you got comments, if you got questions, and just maybe make it open to the community, entertain some crazy ideas or crazy people or whatever. We could do that. Lack of a guest.
I think that's a solid idea because Saturdays have been kind of like sequestered to the topic, and maybe people are available on Saturdays when they're not otherwise available today during this time, right? So I think that's a really good idea. So we'll figure that out later, guys. Okay, guys, thank you all so very much for attending. Again, we're gonna have it on Saturday. We'll have Alex. We'll have an update then. And we'll take it from there, guys. We'll figure it out. So everyone have a good rest of your day, and we'll see you all Saturday. Bye-bye now.